Okay, awesome. So that was an awesome presentation. And I remember the first time that I went to your presentation, you
Yes.
mentioned this one phrase, which I still love right now. You say that your sessions are very beginner friendly,
Thank you.
and you said that it's okay even if you only get 50% of what you said,
Yes.
because you have recurring talks, and if the next time you can come again and understand 60%, and then the next time you understand 70%, and the next time you understand like 80%, and it keeps on increasing. So I'll be honest and say that even until now, I've attended a couple of your sessions, and maybe I'm about like 65% ish before I am confident to start trading, but it's been consistently
Increasing.
Like, the confidence is consistently increasing.
Right.
There were some people who said that they are stock investors and they are very new.
Okay.
They gave like a self assessment of themselves. Maybe like some even give zero, right? Zero understanding.
I started at 0 as well, right?
I-
Everybody
I-
started at 0.
No one come out.
Right. No one comes out and knows how to trade. It is not natural.
Yeah,
Some
yeah.
people can paint, like they're artistic from the start, but you can't just immediately, oh, I'm a prodigious trader, right?
No, I mean like even painters, they have to learn how to hold.
Yeah.
Hear a
yeah.
different story.
Yeah.
I want to bring up something which maybe existing stock investors need to keep in mind, which is tuition fee. Can we have a chat about that?
Okay, tuition
Okay.
fees.
If you are a stocks investor, I'm very sure that you've probably heard of this advice before. Rule number 1, don't lose money.
Yes.
Rule number 2, never forget rule number 1. It's a very popular quote. No prizes if you can guess who said it. Warren Buffett said it. But you have to remember that even Warren Buffett, like the greatest investor, one of the greatest investors out there, he lost 23 billion in the financial crisis in 2008. So losing money for an investor is part of the puzzle,
Yes.
or part of the journey. And this, for me personally, is a mindset that I had to break through. Many people, including myself, tried trading, maybe even like tried investing in something, tried trading, tried something new, didn't work out, lost money, never touch it again. Never touch it
for
again.
life.
Right.
And warn people against it as well,
No,
Yeah.
My my dad right now, because he has a property that he can't sell for like a couple of years already now, he told me like, don't get property.
Never ever touch property ever again for the rest of your life because of their own personal experiences.
Because of their own personal
Yeah, I
experience.
understand.
Right? So for those of you who are out there, just know that tuition fee is a concept that if you haven't learned before, you might want to get familiar with it. I want to know, for someone like me who is interested to try out, different investments and strategies.
Yeah.
But of course you must put like a stop loss on your tuition fee as well.
Oh, yeah.
Yeah, you can't put like all of your savings inside it, right?
Oh, mine was astronomical. I spent a lot of money on tuition fees. I think over the years, the most expensive course. All right, you guys don't judge, okay? Just don't judge. Like, I think one of the best courses I attended was about 3K for a few days course. I can actually recommend it. That one's by Fred Tum. I thought that was really good. A lot of people, there's different types of courses out there, but that was a really good course. But there was one course that I attended which was, don't judge, it was 18,000. And that was a chunk of my savings, and I would attend courses for the past 4 years since I joined Kananga every other weekend. Because I was so hungry to learn and I didn't want to make mistakes in the market. So I would trade, but I think your concept of not just tuition fees in terms of
Not
course
just learning course,
is
it's practical.
actually money to
putting the
burn.
money in. Yeah.
Money to
Yeah.
burn costs, right? So I have a few friends who have picked up trading over MCO, and I think that trading is actually very useful if you're having a freelance job out there, because you can do it on the sides, you can do it while you get your feet back above water. And also, it's a skill that you can have for life. So even in 20 years, if you wanted to continue trading, you can, and then you can still have income from doing the things that you love. If you're an artist, you can still have an income. If you are a writer, you can still have an income, as long as you have a trading background and consistently make money every single month just by doing a few presses of a button. And then the rest, you just let the profits pay for your lifestyle. But back to tuition fee, I think something as basic, our friends who have started trading, they read a few books. I'm a voracious reader, and if you don't want to pay some ridiculous tuition fee like me, there are many trading books available out there. You can read Steve Nissen on candlestick charts. You can read even trading books, like even Pauline Yong has very easy to read Malaysian books. And I realize a lot of people, they don't really like reading Angmo books, but I really do like reading foreign books as well, American books especially on trading, Kirkpatrick, McGee on technical analysis, but these are really thick. But for a beginner that you just want to get started and get familiar, you can read those kind of books. 50 ringgit at Popular, every month your tuition fee, you go put 50 ringgit aside and buy one book and read it. 50 ringgit January, buy one book. February, buy one book. March, buy one book. And then you do your own checklist, all right? But my friends, after they do the Popular kind of MPH kind of way, 1,000 ringgit structured warrants, you just
The
balance
upfront capital.
Yeah, upfront capital. You just make sure that you don't lose that 1,000, and the second you can consistently be trading at 1,000 and then only continue to grow it, then only you increase to 5,000, 10,000. Even if you have 10,000 ringgit that you would like to burn, feel free to donate. But if you have 10,000 ringgit that you want to invest or put aside, I would suggest just taking 1,000 out first, holding the 9,000, and then just seeing what you'll do with the 1,000. Because the way that you spend, say you're into personal finance, the way that you spend 1,000 ringgit is the same way a person would spend 10,000 ringgit, 100,000 ringgit, a million ringgit, right? That's how I see it. Because if you can't spend 1,000 ringgit right, or 10,000 ringgit right, you will just be one of those millionaires, lottery winners, that burns through $1 million because they can't even make 1,000, they can't even manage 10,000.
I want to ask you also something about, you mentioned following kind-hearted gurus. No, I'm kidding. But I'm very curious to hear your commentary on the existence of trading gurus in general.
I don't mind trading gurus because sometimes they are just people that want to help out. But you have to realize that a lot of these trading gurus out there, and this goes for all of you out there, many of them are unlicensed.
Well, what license do you need for trading?
You need your Module 6 and Module 7 to be licensed, and even to be a speaker for Kenanga, I need to be elected a spokesperson. You can't just simply be talking on behalf of your department, on behalf of your team, on behalf of your bank. So a lot of people out there, they're actually totally unlicensed. They just think that they made money 100,000 one time in 1 week, and then they can teach everybody. But there are many things they don't know, and they might not have your best interest at heart. And I think it's very dangerous. These guys, I've heard of stories where these gurus, they lost people's money, and maybe they say things like, you know what, I'll make your money grow, but you need to invest it into my personal account, and you can't have it back for 1 year. What is that?
Happens?
Yeah. Or they even tell, say, we're all going to go and push this stock up as a group, and this is what we are going to do, and you guys can't take out your money until I take out my money. That is front running. That is illegal, plain and simple.
Are there any practices that now happens in Malaysia that Malaysians specifically have to be wary about? Or are there like a blacklist of sorts that people can check?
There is. Like SC does have a blacklist of even businesses. Like if you actually Google, there's an enormous blacklist of names and businesses on SC's website, but a lot of people don't know this. But I think the main practice right now is that people are very eager to jump into goreng counters in the past few months.
How would you explain what is goreng counters?
So this term goreng counter is a stock that has no fundamental backbone. You know, there was no strong fundamentals over the past few years. You don't even know what the company does. You don't even do your homework on it. You don't even know where its HQ is located. A lot of people have no idea anything about these very poor counters. And then suddenly, when it does a 5 cent jump in one day, a 1 cent stock becomes a 5 cent stock, people just jump in, and after that, it goes up to 6, comes all the way back to 0.5, and after that, they lose money, and they're like, oh, well, you know, I knew what I was getting into. I was jumping into a goreng counter. But I find that totally unacceptable. Why would you throw away your money like that? You know, consider things like structured warrants. If you really have maybe very little capital, like 5,000 ringgit, then you would consider these kind of cheap counters. You know, do a bit more homework, learn about structured warrants, and make your money consistently profitable. Not just go to Genting kind of portfolio and burn it all the time.
Okay. Help me go through a thought process that goes in my head for a little bit.
Oh yeah.
Okay. As someone who has very minimal trading skills, so I've read up on candles and the Fibonacci sequence, and a bunch of other like indicators, right?
Alright.
Okay. So you mentioned just now like bull trap, bear traps, whatnot.
Yeah.
So in theory, okay, I know how it looks like.
Okay.
So, but hindsight's always 2020, right?
Yeah.
Okay. So, okay, I'm coming in, and perhaps some of the audience as well. You come in with a lens of, okay, I'm a value investor. I've always looked long term. I want to follow what Isabel advice, which is to use the 60-40, right? Which is to both do the mother share and also the structured warrants that go along with it. So I must know fundamental analysis.
Okay, but 60-40, you can also have 60% in, say, something really boring like stash away or bonds, and then 40% in warrants or 20% in warrants. You know, you can always play with
around with the 60-40 ratio.
Yeah, correct, with the ratio, as long as it makes sense to you.
Okay. However, if let's say I come in with the view that okay, I'm a long-term investor, I want to try add in a little bit of structured warrants inside my portfolio, and then I want to as a long-term investor, value investor with stocks, I am actively monitoring with my limited time and knowledge, right?
Yeah.
I'm actively monitoring 10 stocks.
Yeah,
right?
just
because
choose 10.
Yeah, just 10 like big like blue chips.
Yeah.
Right? And that's all the time that I have right now with my busy schedule. I'm doing my work. This is just my part-time.
Correct. And I have 5 kids, and I have a mother-in-law and a father-in-law, and you know, people are always like that, right? Everybody has their own life.
My mom actually does have 5 kids. Setahun satu. Anyway, where was I? And then, so I am actively monitoring 10. Within, let's say, like a year, I can expect opportunities to come from those 10, regardless of any of the sectors.
Yes.
Okay.
So maybe you choose
to know.
2 inside oil and gas,
like
2 in banking,
in my head,
2 in construction.
Like you mentioned, like if I missed out the glove counter, oh shit,
Let it
if
be,
I'm not monitoring the glove counter, then I'm not, do I even have enough opportunities? That's what.
Yeah, a lot of people think of that. And then after that, right now, all they can do is monitor gloves, and they are totally a horse with blinkers on. And they totally forget that the market has so many other things besides glove stocks. There is tech, which had a fantastic rally. Inari, VS, Franken. Phenomenal charts. Go and look at them. You know? 10:15 p.m. Eeks. All right. But you see, people have these rubber glove blinkers. If it's not super nice, it's top glove. If it's not falling down, that means the entire market is dying. You know? You can't be like that if you're a trader. You can't be a one-trick pony. Right? Consider other stocks. Have a look around. Get very familiar, like you said, with your 10 children. You know? Understand that this guy likes to follow exponential moving average. This one likes to follow when price cuts above EMA 50 and then stop loss when it cuts down below at EMA 20, then that's its pattern. When this child, he likes to do a Fibonacci retracement. This one likes to always do a Wyckoff up thrust and down thrust, a bull trap, bear trap. This one likes Japanese candlesticks a lot to show reversal patterns. Erratic, but likes Japanese candlesticks. So you kind of understand the behavior of each of those stocks. So when the time comes, the opportunity comes, boom.
I think that in order to do structured warrants well, you must be able to, or even at trading in general, you must be familiar with patterns and just to look out for it. And something that you do a lot, I notice, is like taking a lot of notes. So that's something I'm going to incorporate as well. So we are told that our time is kind of running out, but I do want to end this with again a reminder that Isabel does this webinar series very often, every single month, every single week.
With this month, we did quite a lot for December because we wanted to do a recap of the year and give people an idea of the common mistakes that people make. And the main mistake that people have is they don't follow the MST concept, which is they don't look at the live matrix, they don't know what effective gearing is, they don't look at sensitivity ticks, they don't know when the expiry date is, they don't know who the issuer is. So the 5 most common mistakes are those 5 most important things. That's the scary part. But yeah, for next year, we'll try and do a webinar or 2 every single month. And yeah.
Where can people find these webinars?
You can find our webinars. They'll be posted on our Kananga group Facebook and on our Telegram as well. We also have a WhatsApp hotline at 017-214-5177. But all of this you can just get on our website NagaWarrants.com. You just scroll over there and then it'll show you all of these details.
Alright, so with that, do you want to give the audience a final call to action? Something that they should do if they want to explore structured warrants more?
I would say the easiest thing is watch those videos on NagaWarrants.com. There are 2 sets. The beginner is 1 hour, the advanced is another 1 hour. That's 2 hours. And watch it over the weekend. You know, plan your time over the next few days because it's going to be Christmas anyway, right? But figure out what's important to you. If you find none of this absolutely useful to you and you ask yourself, so what? Doesn't matter to me. My dad has given me 5 million in the bank account, 5 million, 8% in bonds will give me 30K every single month. I did the math.
Okay, I believe you.
So that's giving me 30K every month passive income, then I'm fine with that. You know, but if you want to do something a bit more, you want above average results, you got to take above average action. Oh yeah, few more things we're listening, a few comments I noticed. I'm just making sure that I don't miss any of your questions, guys, since you guys want to ask a few things about warrants. To become with I used to have smart hearts. I'm a cool cat. ST, that's right, gotta be a cool cat. Best advice I got when I was a trader starting out is to behave like a robot. Mechanical, cold, heartless, cool. You know? I try never to lose, and if I do one on one counter, my overall portfolio is in the green. I make some, lose some, but I try to stay in the green overall. That's right, ST. Minimize your losses. Tom Morris, mine last course for internet marketing cost me 5K. Yeah, man, I've paid that before, but nothing worked. Was eager to learn. Yeah, that's why you need some quality. Tom Morris, any book you may suggest for basic learning in stock warrants? For warrants, there are not many books available, unfortunately. But for technical analysis, I have a bunch I can recommend. Messages on the private chat. And maybe tomorrow, the day after, I'll write you a summary on our Telegram channel on books that I recommend. Tom Morris, so many gurus outside. Actually, they knew a little bit, but take our money for training. That's what I said. You need to ask, so what, right? How do these people make money? Is it from selling courses, selling books, or actually trading, or taking your money? Everything else, thank you so much, guys. Oh, that's very sweet of Diana to say, look at that.
I can't see, I'm not wearing my glasses. So you have to read it out for me. Sorry, era bun.
Okay, my power is like 1,800.
It's low, but I can't see from
You
here.
can't see from here, okay, because you're more vain than I am. Diana
I am.
Jamaluddin, this is possibly the best webinar. Oh, I'm not going to read it.
Aw.
I'm too shy. Thank you, Diana. MK, very passionate, knowledgeable. Oh, thank you, Miss Tan. Tom Morris, eye opener for warrants. All right, I'm not going to read the other stuff because it's more, thank you stuff. But Aaron Salvam Sevaraju, warrant related. Is the bid price the price at which the issuer would buy back the warrant? Yes. On the live matrix, the bid price is the price that issuer would buy back. Ahmad Fawaz, in the market, got Inari C. No, but in live matrix here, Inari C65. So only Inari C65 issued by Kenanga? Yes, you are right, Ahmad. How to decide to buy which one? You use the MESTI strategy. And why different price given by different issuer? It's the same thing like baking a cake. So different issuers, they have the 6 ingredients in baking a cake. You just Google the Black-Scholes model, and all of the issuers, they put different proportion of ingredients because that's what they think that you would like as a client, as a trader. So it is up to the issuer to price it differently, whether to offer a live matrix or not, whether to offer a warrant scanner or not, and there. That is it.
And that is it. So we'll stop here. I will leave behind later a bunch of links for you guys to check out. We have shared before, so if you're raging to scroll, you can find the Kenanga YouTube page, you can find information at the Kenanga YouTube channel, the Facebook page, and also NagaWarrants.com is a great resource for everyone out there. So with that, we'll call it a night. We have covered a lot of things.
We have.
And I will continue sharing information about Isabel's webinar sessions in the Ringgit Oh Ringgit channels. So thank you for joining us, and goodbye.
And goodbye. And it's time to watch Mandalorian, because until now I haven't watched it. Can you believe it? Don't tell me anything, guys. That's the purpose of my life, to watch Mandalorian. Toodles.